Good morning, everyone. Once again, this is Black Forest coming in with another pre-market analysis video. Today, we're going to be looking at the USDCAD, but before we get to breaking down this Forex pair, we have to state that this video is for educational purposes only. This is not financial advice, but we'll all know why you're here, which is to find good Forex content, which can lead to one's ability to improve as a trader. Now, with that being said, let's go ahead and get started to see if we can go ahead and break down this Forex pair and improve your abilities and get some money in your pocket, okay? Now, before we break down the technical analysis of it all, basically technical analysis is defined of what is physically going on the chart. We're going to break down the fundamentals of what's going on with the USD and the CAD, okay? Now, USD, as we stated in previous videos, is fundamentally weak due to the overall inflation that's being suffered by the U.S. economy, and we've had some very poor economic news coming out for the USD over the last over the last several trading days. Okay, but also throughout this European conflict for Russia and Ukraine, it has acted as a non-traditional safe haven currency, which means that it gets strong anytime that the European conflict sounds like to spill over into a global conflict. Okay. Now let's discuss the CAD. Now the CAD has been one of these currencies over the last couple of trading weeks that has been bouncing between strong and weak, which is due to the influx in the gas prices because oil has a lot of um, somewhat indirect correlation with CAD. Okay. And CAD is also what you call a panic currency. So anytime there's a panic market, it starts to lose value. And it will especially start to lose value if the European conflict sounds like it's going to spill over into a global conflict. Okay. Now, with that being said, let's go ahead and break down what's going on the charts. All right, for the most part, we've been ranging out, but for in the last couple, let's say over the last two trading weeks, we have had some breaks into range, which means it wants to do something. It wants to do something. But still, what we currently have right now, this would mean that the USD is much more stronger than the CAD. Now, this is a little tricky. This is a little deceptive because you do have a break right here, and then you do have your retest, and it does look like it's pushing up. So it kind of deceptively looked like it's going up in an uptrend, especially if you definitely look on a lower time frame. But from what I believe, I think we're just making a new higher border extreme for our range. This is more so what I'm seeing. I am not seeing a push up because, truth be told, the USD is not that strong to be. It's not that much stronger than the CAD. And like I said, CAD's strength and weaknesses is also dictated by happening with oil too. And the American government has, as of yesterday, banned Russian oil from being sold around the world. So I really do not see how this can be pushed up. I think this is more so just an initial push breaking the range, or it looks like we could possibly be establishing a new border within the range, which every time we get to this 1.288888 area, we're going to be going down, and every time we get to 1.26, we will be going up. Okay, because it was almost like this. So for a time, we were just bouncing between these prices here, okay? Then we had a break, and then we had to come down, and then we had another push up, but we just keep stalling out right around here. So, in furthermore, if this is really true, this would kind of be this would be much more smoother, much more powerful, not as choppy. And this right here is coming down too much, it's coming down too smooth. So, I would not really trust this to place a long position, but I do believe that if you would like to trade the range, every time it gets to this area here, you could probably place a sale and it'll probably get to this area here before it starts reversing. The only way we can get some true trajectory of an up position is if the CAD becomes much more significantly weak than the USD. But the way gas prices is about to be and the price of barrels of oil is about to be, I don't see how CAD is going to be weak for some significant time. I mean, the Canadian economy is suffering from somewhat of an inflation and the ripple effects of dealing with one of its closing trading partners being the American economy, being America. But CAD, like I said, has been periodically off and on one of our stronger currencies heading into these trading weeks. So I would say just it's trading between a range. So every time we get in this area here, price is going to drop down, and every time we get in this area here, price is going to bump up. But like Forex stances, we don't like to train ranges. We like to train momentum and trajectory that is based off fundamental analysis. Okay, so I hope that information was helpful for you guys. Happy trading.